All right. Back in the action here, guys and gals. It's about that time of day again. It's Wednesday evening. It's August the 14th, 2019. My name is Joseph, by the way. And as always, welcome back to your nightly newsletter. Now, don't forget, guys, I help traders find high-quality trade setups using a very simple three-step trading strategy that we teach and trade together every morning in our trade room. But my job is a little bit different tonight. I have an extremely important job tonight. Tonight, my job is to identify the most reliable setups we see setting up for tomorrow. That's Thursday's trading session. And we have a lot to talk about here tonight on this video. We're going to cover charts tonight. We'll grab oil, S&P, Nasdaq, gold, and euro. We'll check the calendar. We'll put the plan together for tomorrow. I'm going to start off first here on that black gold, that Texas tea, those crude oil futures, because like a lot of these markets, they got a whooping going lower here today, but it's how the day ended on the black gold, on the crude oil, that really makes me think we might have a shot here for a possible reversal and move right back up off these lows. Let's jump into that oil futures, that Texas tea here tonight, that crude oil, and let's take a look at what the plan is for tomorrow. Now, first of all, we are watching rollover closely here. You will see a rollover reminder on the chart here for tonight. As of right now, we're watching that. This, of course, is the 919 contract. As of right now, the 919 contract has the most amount of volume in the oil futures, but once that 1019 contract has more volume, it might be tomorrow, it might not be until Friday. Remember, guys, around the 15th of every month, you do want to keep an eye on rollover. So as we do go into rollover here for tomorrow, right, we are watching rollover, but let's talk about the chart here for us this evening. Big, strong run going lower, but it's really all about how the market finished off today, right? Get a bear momentum overall, but that strong move coming off of that low, that strong move tells me we're going to probably see a little bit of a pendulum swing back in the opposite direction. And what I'd like to do here is I'd like to use that trading range, find some buy zones, right? Find some sell zones and play that buy off of the low. And then, of course, later on, that sell off the high. I'm also going to talk about if that market continues going higher and what will need to be a buyer for that target back up to retest last night's high. So I'm going to break down a lot of different options here on oil for both buying and selling. I think in the short term, we have a great shot here right now to pick a bottom. And I'm going to dive into that in a lot more detail tonight on this video. Over on the S&P, of course, just like the oil, right, except the bounce at the end, we have very, very bearish here on the S&P, pretty much giving back all of the gains and some from yesterday, right? This seesaw back and forth, hot and cold market continues here right now, literally waiting on the next headline regarding the U.S.-China trade talks. So obviously we're bearish right now. There's no doubt about it, but you'll notice it's not what we see on the chart. It's what we didn't see today that is the most important clue, and that is no pullbacks, right? There were very little, right? In fact, the only pullback we really got was right there about 1:30 this afternoon, and it just kind of failed right back down again. Not much of a chance for sellers to sell high, right? There was zero opportunity here for these bears to really sink their teeth into something good. And so, of course, I'm looking for a pullback right now. I got a bunch of levels of resistance overhead you can see up in that battle zone. We'll talk more about that as we dig into the video here tonight. But really, it all depends on, right? Do we see a shallow pullback? Do we see a deep pullback? Do we run lower and reverse? I've got really three key scenarios I'm getting ready for here tomorrow, and maybe a fourth scenario, because if a market could go straight up yesterday and straight back down today, why can't it go right back up tomorrow? We'll talk about that, of course, in a lot more detail, both buying it and selling it. We'll talk about when to look for the long and when to look for the short here tonight on the video. And of course, over on the Nasdaq is in a very similar situation to the S&P 500. It's obviously very, very bearish here on the NQ. We have on the NQ a combination here. There's a lot going on this chart right now. I've got a wedge, I have a range, I have a hidden channel here on the chart. You know, and again, it's not really what we have on the chart that is the most important clue in my eyes. It's what we didn't get. We didn't get any juicy pullbacks. We didn't get any shot, right, to sell nice and high here. So I'm looking for a short, but I'm really looking for right now is Is it a shallow pullback? Is it a deep pullback? Is it a shot lower and a failure back up, right? I'm definitely looking for a chance to buy into this oversold market right now. And then absolutely, right, could this market turn bullish? Like I said in the S&P, if it goes straight up yesterday, straight down today, what's keeping it from going straight up tomorrow morning as well? So we definitely want to keep our eyes open on. I'm looking to be a buyer down below. I'm looking to be a seller up above. And again, we'll talk about some different types of buy setups, different types of sell setups. We'll dive into a lot more detail on that tonight on this Nasdaq. And then of course, over on the gold tonight, gold, nice big. And like I mentioned last time in the newsletter, I just didn't think it was going to be very easy for sellers to get short back here. And of course, buyers are waiting to run this thing back higher. So we definitely know the buyers have control right now. We talked about confluence in last night's newsletter. Well, here's a lot of more confluence here right now. I've got a channel here right now. I've got a support trend line. I've got my trading range. I've got a hidden channel. And so we really have a lot of great areas down here I'd like to be a buyer on. We'll talk about a couple different setups I'm looking forward to buy down in that 15.17 to 15.15 area. If we don't get the pullback, though, if it keeps going higher, we know where those buyers are trying to go. They're trying to retest that high from yesterday's trading session. But as you can see, there's not much open space up here. And so if we do try to make a breakout going higher of this range, I've got one very specific setup I'm watching for as this market tries to roll higher. So we have a lot to talk about tonight on that gold. So if you're a gold bug like I am, make sure you stay tuned on that as well. And we talked about this last night on the euro. Finally got a breakout of the big range over the past 2 weeks, but it looks like we may have found another range to work our way into. Now, I know what you're thinking right now, right? This is a bear market, obviously, but look closely here. And you'll notice we started off the day today inside of that sideways balanced range, right? Now, if you've taken my trading classes here at School of Trade, you know that a balanced market tells me a very important story, and that is what goes down will likely come right back up. So I know we're bearish right now, but I've got my eyes on a buy setup here on the euro. I've got a channel coming down here, right? This is very similar to what we saw last week here as well. Looking to be a buyer off this low, but because we're so bearish, obviously I have to be very careful, very precise with the entry signal on this. So we'll talk about that precision entry here in a moment. And of course, right, what if it keep going lower? This market could keep going lower as that dollar, right, gets pushed higher. This euro will continue to be dragged lower here. And we'll talk about, right, some of the ways in which we can sell this market as it goes down to some key targets as we wait below. So in the short term, looking for a buyer, but I'm also open-minded here to keep on selling if we can get a key pattern here for us tomorrow. So euro and gold, Nasdaq and the S&P, and of course we can't forget about that crude oil futures. But before we jump into our video here for tonight, I want to make sure you remember to join our mailing list, because you may not be aware of this. Just before I publish this video on our YouTube channel, I fire off an email to everybody on our mailing list, and I want to make sure you get that email. That way you know every time our nightly newsletter goes live. And to join the mailing list, it's really, really easy. I'll put all the links right below me in the YouTube video right now, but head over to the blog at Sideways Markets. There's also a form on our website at schooloftrade.com. Join the mailing list. All I need is your first name, a real email address, right? A real email address, please, and then hit that subscribe now button, because again, I'm gonna when you add to that mailing list, I'm going to send you a welcome email to the email address that you gave me, and inside that welcome email, there's a verification link and a bunch of great free resources so you and I can get the most out of working together every evening on this newsletter. So don't delay, pause the video, register for the mailing list, and then don't forget, when you join the mailing list, you've got to go in and check your email, because I'm going to send you a welcome email, and that welcome email will have your activation link, so now you'll be active in our system, and a lot of great goodies in there, right? So you and I can work together more in the future. So definitely join that mailing list. And then real quickly here, guys, every evening I'm always asking for feedback. Give me a couple minutes of your time down in the comments section tonight. If you were to go back and turn back time, if you could turn back time and go back to when you were a brand new rookie, what is the advice you would give to your rookie self? Or maybe you're a rookie right now. In your eyes, what's the biggest obstacle standing in your way? It would mean the world to me if you give me a couple bits of feedback in the comment section below here on YouTube or on our blog at Sideways Markets. Give me some advice, right? If you could go back and give some advice to the rookie version of yourself, right? Go back in time. For me, almost 15 years ago, I was just a kid. What would I tell that rookie version of me? Don't do this. Make sure you do this. Pay attention to that. What would you give the rookie version, right? What type of advice would you give yourself if you could turn back time? Or maybe you are a rookie. What type of lessons could I teach you more on this newsletter? In your eyes, what's the biggest obstacle standing in between you and becoming confident and consistently profitable? Guys, and while you're down in the comment section, hit that thumbs up button for me tonight on the YouTube video. I'll tell you, it helps me so much to expose this video to other new traders who can definitely benefit from this as well. You know how much you've benefited from this newsletter over the years, right? Hit that thumbs up button if you like the newsletter every evening, because it helps me expose this video to other traders who can use this to learn and earn as well. So give me that comment in the comment section, hit that thumbs up button, and don't forget, if you want to call me anytime, right, day or night, Monday through Sunday, I'm always here to answer that phone call. Maybe you want to ask questions about the best brokers right now, the best charting software to use, the data feeds that I like to use the most. Not every data feed is the same. Or maybe you want to ask questions about getting started as a new client. Or maybe you want to get access to our trade room on a free pass or part of our free trading classes. Pick up the phone, call that toll-free phone number in the upper right-hand corner, because unlike a lot of trading education websites, I'm a real person and I love talking to my clients. I realize that most websites don't like it when you call, but I love talking to you guys. So don't be afraid to pick up that phone and call me in the office, because I'd rather give you the real reality, right, of the situation, rather than having to send you out there on YouTube land to search for, right, God knows what else is out there on the internet these days. So call the toll-free phone number in the upper right-hand corner. I am always here to answer all your questions about whatever you may need help with. And of course, in the meantime, let's get this newsletter video underway. Always great to have you here with me. Tomorrow's Thursday. It's August the 15th. We are getting later in this second full week of the month of August. And as you can see here, there's quite a bit of news on the schedule here for tomorrow. Starting off first, you got that big block at 8:30 tomorrow morning. You got jobless claims, you got Philly Fed, and of course, you've got retail sales. Now, retail sales is definitely something on my radar tomorrow because we trade Nasdaq in our trade room. And of course, retail sales, right, Amazon, things like that, right, online retailers, definitely going to be hitting the Nasdaq hard tomorrow morning as well. So keep your eyes open, watching the NQ around that retail sales number tomorrow morning at 8:30. I don't think the jobless claims report or the Philly Fed's going to have that big of an impact, but I do think that retail sales number is definitely going to be something to keep your eyes on tomorrow as well. And then, of course, we got the industrial production at 9:15 Eastern time tomorrow. That industrial production number at 9:15, that's also a big news report as well. And then I don't normally look at Green Star News, but we got that housing market index at 10 o'clock tomorrow as well. So I'm definitely keeping my eyes on that 10 o'clock top of the hour. If I had to guess tomorrow, I would guess 8:30 and 10 o'clock would probably be the big hot spots for some nice trade setups tomorrow morning. And hopefully we can kind of overlap these times of the day tomorrow with some nice technical levels for tomorrow as well. So 8:30 retail sales, 10 o'clock, right, that housing market index. We are definitely going to be tuning in tomorrow morning bright and early. Don't forget, we open up our trade room every morning at 8 o'clock Eastern time, Monday through Friday, and we're going to execute this strategy together with all of our advanced members. Let's get into those charts now. So now we know what news we have tomorrow. Starting off here on oil, then we'll go into the E-minis, over to gold, and of course we'll wrap up tonight on that mighty euro. As I mentioned earlier in the introduction, oil is in rollover alert right now. Around the 15th of every month. Today, of course, is the 14th, but of course tomorrow being the 15th, the last time I checked. And so tomorrow being the 15th, we do want to start looking out for that volume rollover. And as I mentioned earlier, this, of course, is the 919 contract here on oil. We're watching that 1019 contract, right, as we go into tomorrow's trading session. For example, I can see in my market analyzer here in NinjaTrader, I can see here that I've got the 1019 contract is about half of the volume right now, maybe a little bit less than half of that volume. Now that can change real fast. You'll notice that the 919 contract has just, again, a little more than double the amount of volume the 1019. Once that 1019 has more volume, then we'll trade the 1019. And don't stress out about this too much. You really can't mess it up if you happen to trade the 919 even after you should be trading the 1019. It's not the end of the world, right? We're not talking about contract expiration here, guys. We're talking about rollover, right? Not expiration. So rollover tomorrow, most likely going to be either tomorrow or Friday. It's tough to tell here right now, but be aware tomorrow morning if that 1019 contract is counting more volume, we'll definitely make that move over to that 1019 contract. Now, with that said, what do we have in the chart right now? We know we had a big bear down day today. That big bear down day settled into a trading range, you'll notice, right? Relatively early. We then shot down through that range and then popped right back up. So we know we're bearish overall, but the day ends with a strong bullish move. And anytime we see a strong move in one direction, I always expect to see a relatively good pullback and a second leg. So think about a measured move, right? Some sort of symmetry now running back in the opposite direction. And to kind of structure the trade on this, I'm going to use this trading range. Now, anytime I see a trading range, I like to use the size of that range to help me identify my buy zones and my sell zones. Range-bound markets are relatively simple, right? They're balanced markets, buy low, sell high, and avoid the middle. Now, this is a relatively narrow trading range here, so I'm opting to use a little bit wider battle zones on each side. And the reason why that's important is because I want to get outside of this range to be able to buy. So I'm not buying right inside this no trade zone that I got marked up here on the chart. So again, I'm thinking we've got a strong move up. I'd like to buy that pullback and rally this market going higher. And my obvious choice for this is going to be to let this market try to run lower. Those sellers, they're going to be hunting for a retest of that low, right, at that 53.98. The bears are going to be hungry to retest that low. And they may, right? They may definitely get a retest of that low. But if I can get a nice strong run going lower here, I'm going to look for those sellers here to try coming in and selling off that moving average. If I can get some sellers to try to take that pullback off the moving average, now I can look for my favorite combination setups, which is, of course, a failure into pullback combination. And again, the target on this will be the opposite side of that range, right? So, think of it this way. The amount of the move below the range is oftentimes the amount of the move above the range. So it'll be a little bit above that 56, right, even area, maybe 56.10 or so as we go. But let's just call it, right, let's just call it even at 56.08. So again, I'm looking for that move lower. It's an overall bear market, so I'm expecting you're going to see some sellers that will come over and try to sell that pullback. Right? And when they do, we'll see what happens, right? Most of the time, though, when you have this little open space down here, there's not much open space to sell. Sellers are going to be a little bit weary of selling down there, and I'm hoping I can buy right into those stops. And then, of course, moving average comes over, buy that pullback as well. Again, it's called a failure pattern into a pullback pattern, right, coming off of that low. Now, what if we run higher here? If we run higher, it kind of really all depends on kind of how the market does it. If they sit sideways, right? If we sit sideways here in the overnight, that will pretty much balance out the market, right? If we go sideways, then at that point, we're no longer bearish, we're no longer bullish, we're pretty much balanced. So if we do go sideways, now I can look to sell off the high using my 1-2 try failure pattern. Right? We call that a 2-try failure pattern, or I can buy off that low with the 1-2 try failure pattern down below, right? So basically buying low and selling high while avoiding the middle of that trading range. But let's just say, for example, we make a real strong run, right? Let's just say, for example, it's a real strong run here, right? We don't even stop inside the range. We keep on running hot here as we go. At that point now, if I still want to be a seller in here, now I've got to wait for what I call a nested failure, which is where now we'll wait. The buyers will buy once, lower low, buyers buy twice, and then we can sell back down into that trading range. Again, this is a slight variation of that same failure pattern. It's called a nested failure pattern. Okay, now, what if the market holds and keeps going? That'll be a reversal. So if we keep going higher here, moving average comes over, and the buyers, again, if they try once, lower low, try twice, I'm looking to sell right back down. That target will be back down to retest that low. And again, that'll be a 1-2 try. It's a nested failure. But if those buyers can hold that pullback, now and jump off that moving average, once I see that big jump off the moving average, now I know this becomes a bull market, and I'm going to start looking to buy a pullback at that point. I'm going to mark up that high. I'm going to mark up that low. I'm going to mark up that swing high, and that will give me my sweet spot now to buy that pullback. And that pullback, of course, my target, as you can imagine, is back up to retest those highs at 57.47. So we're definitely looking for this, right? I'd love to see a full-blown reversal on this. But again, we have to see that 1, 2, 3, that 1, 2, 3. It's got to go up. It's got to pull back. It's going to jump off of that moving average. And then from there, mark up that high, mark up that major low. And again, now we're buying off, right, that sweet spot, the low of that channel for that target now going higher. Now, there may be even more aggressiveness, right? Big, strong move up, big, strong move down. What if we just jump, right? What's the plan then? If this thing just jumps and runs higher, the aggressive entry long, which will probably be the only option if it does get aggressive like that, is a 1-2 buyer failure, right? I call these a 2-try breakout. So if we see a very strong move going higher, right? Again, the contrast will be we go up, we pull back, and jump off the moving average. That's a 1, 2, 3 reversal, and we'll find that hidden channel because the market at that point is not as aggressive. But if this thing just jumps, right, just tears higher, 1 try. 2 try for the bears. The first pullback is the profit taking. The second pullback is the actual short sellers. At that point, we know where their stops are, and we're buying now into those stop losses. You're going to need those stop losses for those sellers to fuel that move as it goes higher because, of course, that target is right overhead at that 57.47. So now we know we're watching for rollover tomorrow. We know we're looking for that buy off the low, right? That failure pattern off the moving average, right? We're looking for that 2-try breakout failure, right? 2-try breakouts back and forth, 1, 2, 3 reversals. Don't forget up in the nested, right? If that move goes nice and strong, that nested failure. But I'll tell you, I have so much more I want to share with you about this chart right now, but I got to keep going because I got a lot more to cover in this video tonight. So if you want to get a deeper dive, if you want to learn more about all the patterns, the failure patterns, the pullback patterns, the nested patterns, everything we talked about here in the video so far, right? I'm going to keep going, but if you want a deeper dive on this, I'm going to put a link in the upper right-hand corner for you right now. And that link will take you right to the registration page for our free trading classes. You're going to love the free course because the free trading course will teach you my entire 3-step strategy along with my 4 favorite entry setups. You'll also see hundreds of examples of how we use those setups on our favorite futures markets. So tonight, I'm going to draw up the charts right now so we can get ready for tomorrow, but I want to show you all the good stuff here behind the curtain inside the members section of the website. So grab that free course in the upper right-hand corner. If you're not on YouTube, I'll also put a link right below us here on the blog at Sideways Markets. You're going to love that free course. People tell me that free course changes the way they look at the financial markets, and I know it will for you as well. So definitely check out that free course. Next up here, over on the S&P 500. S&P is, I'm going to go with bearish on this. Just a little bearish here tonight. Obviously, we're bearish, right? Big, strong move down here. And again, as I mentioned in the introduction, it's really not what did happen today. It's what didn't happened today. We never really got a very deep pullback. Usually when the markets make those big strong moves down, right, they're going to give us those really deep pullbacks because nobody wants to sell low, and then those deep pullbacks allow us now to sell into failures, right? And we find our best setups right with those deep pullbacks in a trending market. And you'll notice here, of course, there is nothing, right? There's no deep pullbacks, just one little deep pullback here, and not even that deep either, right? It barely a trap on that, right, as we go. So I've got to assume right now that most of this is probably because of liquidation from yesterday's big rally higher. I'm sure a lot of this is just those buyers getting out. But I'll tell you right now, if you're a seller right now, if you're a conservative seller, you are still waiting on the sidelines right now. So we know the market's bearish, but we know we're also very, very low. Big measured move down sitting right here. This whole area is just going to be a lot of support, right? There's a lot of support here. One being this wedge. You'll notice this wedge right now. If you were to connect those trend lines going down here, right, that wedge puts us right at that 28.31. That's a major support level for that wedge pattern. And of course, on top of that, you've got your measured move. That's going to give us a major level of support. And then look left here, and there's a major low back here as well. So we've got three, maybe four different levels of support here, being the wedge support, the measured move support, right, that prior swing low support. So I definitely know we're bearish, but I really don't have any appetite to sell low right now. I'd like to sell up around these highs. And so what I'm going to do here now is kind of reverse engineer this and try to find some levels of resistance that we can use overhead. First of all, I've taken this low here, right, that channel low or that wedge low, and I've kind of popped it up top here, right? Got a midline overhead, got a channel high overhead, and really these are extremely important because I'm going to use those for sell signals here in the trade room, right, tomorrow morning. At the same time, I'm also drawing up a trend line off of those highs. A lot of times, right, kind of those higher highs in a bear market, the market will come back and kind of hit that, right? That's kind of an expanding triangle now, you'll notice, right? Almost like an expanding triangle there on this S&P. So as they go up, we can try to use that, right, expanding triangle now as a level of resistance. So I think the most important thing right now is just to understand there's of course the midline, there's the top of that channel. Those are going to be the big levels that I think we want to really pay attention to here. And that kind of reminds me that the shallow pullback will be a much more aggressive entry pattern, whereas the deeper pullback will have to absorb some of that momentum, right, and be a little bit wise about it. So what's the plan here if we get that relatively shallow pullback? If I can get that relatively shallow pullback, I'm just going to wait here for these buyers to try to buy that pullback right now. See if those buyers will try to buy off the moving average. Just like we saw back here, strong move down, we go up above the moving average. And notice how the buyers sort of buy off of it. Okay, it's a bear market, so the buyers sort of buy that pullback, right? People like me are going to wait right there and sell right into those stop losses every day of the week, right? So imagine now a relatively shallow pullback. The moving average, of course, is below it. The buyers now think it's a short covering rally. The buyers are calling a bottom here. So they try to come in and buy that pullback now, but in all reality, this is not confirmed a reversal yet. We'll talk about a reversal in a moment. But at that point now, I put myself in the shoes of those buyers. I think about where their stop losses are, and ultimately, I'm looking to sell into those stop loss. We might get lucky, too, for one of those failure into pullback combinations. Right, that failure pattern, it's a buyer failure pattern into a seller pullback. And then again, that target will be back down to retest that low and that measured move. But maybe we get a bigger pullback, right? Maybe this thing really jumps, right, as it goes higher. So a couple things you want to think about. First of all, as it jumps to go higher here, what's going to happen? That's going to get a lot of buyers excited. And so with that, I'm going to want to see them try once, try twice. This is very similar we talked about earlier on the oil, right? I call this a nested failure. Again, if we make a run all the way back up to 28.75, Buyers are going to be trying to buy that. They're probably not going to give up after one attempt. They'll probably take two attempts. And once we see those buyers trying twice, now we know where all the buyer stops are. And of course, we can now sell right into those stop losses. Again, it's a nested failure because that momentum will be so much stronger. You also want to keep an eye out for what we call a two-legged pullback. And a two-legged pullback will be a nice strong move up now, draw that trend line. Again, we call this a two-legged pullback because obviously it has two legs to the pullback. You want to get underneath it, use that trend line, and of course that trend line now becomes a key level of resistance. And if we can combine that with our battle zone, that will be a very, very good trade setup. I look forward to taking there because that type of setup has multiple levels of resistance. It's very high, so buyers probably are not going to be buying up there. And at the same time, if I can get a good signal on that, I can risk small to get a very large reward on that. And those are always the most reliable setups. I want to sell at resistance in an area where I have a small risk for a big reward, right? I want to go with the overall trend. I want to incorporate a level of, in this case, resistance, and I want to make sure that level of resistance gives me the opportunity to have a small amount of risk, right, for a big amount of reward. So that's three ways, right, kind of three rules to make sure you follow to increase your odds of success, right? I'm not saying it's easy to wait that long, right? Sometimes it takes some discipline muscles to wait for those setups, but I'll tell you right now, in our trade room, we do a great job at avoiding all of the lackluster setups, all the marginal patterns, and we focus on trades like that. So that's definitely something we're watching for here tomorrow. Now, what if we keep going lower here? Right? What if we keep going lower? If we keep going lower, I mean, you can see here right now as we're closing up shop here right now, we're pretty much closing right down the lows here. Keep your eyes out for a range down here. Right? Keep your eyes out for a range here. Now the Nasdaq, you'll see in a moment, the Nasdaq definitely looks a lot more range bound. You'll see here in a moment. But keep your eyes open for this thing to start going sideways here. Once it goes sideways on this, the size of that trading range will allow me now to add on an additional level of resistance. And then just like we talked about on oil earlier in this video, if I start seeing this market go sideways here, it's a balanced market. It's a bearish balance market, and so I'm going to wait for that, what we call a two-try failure. Buyers try once, buyers try twice. Get those buyers up trying to break out above that high here, and we'll sell that sucker right back down into that trading range. So I'm definitely keeping an eye on a trading range here as we go lower. And then remember, we've got this support level down here. So if we're going to try to sell it as it keeps going, we've got to see another continuation here. So if we continue just to really pummel this thing lower, I have no problem being a seller as it goes lower, but I've got to find that new channel. And I'm going to definitely make sure I wait here to see proof that we have these sellers in full control going through that low. So what I'll do is I'll look for that 1, 2, 3, right? I want to see that strong move down. Now that strong move down may give us a reversal back up into that range. So I'm not going to sell it as it goes down, but I am going to wait for a pullback, see if they can hold that pullback, right? See if they can hold that pullback. And if they can give us a nice run lower, I'm going to mark up that low, mark up that low, mark up that high, right? And then of course that creates that sell off the top of that channel. Target should be that big round number at 2,800, but if you look a little bit wider here, you'll notice there's that 2775. Now, it does seem a little bit ridiculous to think we're going to see another big leg down tomorrow after such a big leg down today, but that 2775 and 3/4 is definitely on our radar if we can break through that 28, 23 half area. So again, watch that sideways range down here. Watch that sideways range. 1 try, 2 try, sell back down. If it keeps going, 1, 2, 3, mark up that new channel. Just don't try to sell off of that low. You know, now is not the time to be selling low. You've missed your opportunity here to sell off of that low. Now, I mentioned earlier there might be a potential reversal here. Be very careful with reversals here on this. There's very little evidence right now, unlike on crude oil, right? Crude did get that strong push higher here. There's very little evidence right now that we have enough proof for a reversal. But if you do want my favorite reversal pattern on this, my favorite reversal is that crown reversal, right? Which of course would look like this. The key is to get that low, get the sellers to try once to sell to retest the low. That will not make a retest, and that will now create the setup now for that crown reversal. What I'm looking for here is, and again, this is a very, very specific setup. It's one of the most reliable reversal setups, and remember, that does not say a lot about the pattern, right? The most reliable reversal setup is still less than reliability of a trend following setup. So please keep it in mind. What I always tell my clients in the trade room is, if I'm going to trade a reversal against the trend, I'll go half size, right? If not a third or a quarter of my normal position size, because the goal is to hold that big target, right? Try to get in, quick first target, and try to get that runner, right? You really got to make those counter trend trades count by taking a quick first target and then leaving that runner, right? Now, again, like I mentioned earlier, full size position with trend, counter trend, you want to go half size, quarter size, third size, just because you know that trade's not going to be as reliable. So crown reversal off of that low, 2 try failures. Again, is it a shallow pullback with a buyer failure? Is it a deep pullback with a nested, right? Is it a 2 try pullback or a 2-legged pullback, 1 and 2, using that trend line overhead, right? That will all be in play here for tomorrow. And then what would a reversal look like? A reversal would simply look like a strong move up, a pullback off the moving average, right? And then jumping off the moving average. That's a reversal. Okay? First thing is a strong move higher. Then they've got to hold that pullback. Once they hold that pullback, great. Now we know we're bullish again. Mark up that high, mark up that low, mark up that low. Now we know where our sweet spot is. And now we're buying off that low. 2,900, of course, is that big round number. That's an easy target. But I got to imagine, though, if these buyers can take control again here, 2,900 is obvious target, right? But then again, into that range we came from yesterday, who knows? And like I said earlier, if the market can make a big move up yesterday, big move down today, there was very little stopping it from making a big move up. We just have to wait for the proper signal here on the S&P. Over on the Nasdaq, though, Nasdaq is quite similar to the S&P, but you can easily see that trading range. Right, that trading range is a big clue here, at least in my point of view here on the Nasdaq. So what do we know in the Nasdaq right now? We know we are bearish. There's no doubt about that. And it does look like they spent the majority of the time after about 11:15, 11:30 this morning, right, going sideways inside that range. Now remember, range-bound markets are what? They're balanced markets. This one obviously has a bear bias to it. I'm going to use the size of that range to find my buy zone, the size of that range to find my sell zone, and ultimately I want to sell up inside the sell zone. I can buy off that buy zone, but obviously I need that, right, that counter trend setup. So we'll talk about that in a moment here. And then, we want to stay out of the middle. Right? Stay out of the middle. The middle of that, right? The middle of that range is not going to be a very friendly area here. So again, we know we're bearish right now. That is quite obvious. We know we have that trading range. Let's see here. What else? As just the S&P also too, I've got these lows lined up here. I've got that marked up for the high of the range, right? There's your midline. Now, I don't think we're going to be able to use that midline like we do on the S&P. That midline is probably not going to work because it's right inside that trading range, right? And I just don't think we're going to see a lot of folks that'll be too eager to sell there. So we're going to get rid of that midline here and just focus on this area up top here. Again, you got the top of that hidden channel. You've also got the battle zone, right? That sell zone off the range up there. So that's a really prime spot here for us. So, really there are, there's a couple scenarios here. As the market goes lower, okay, remember the buy zone here is off that trading range, but it's still going to be a bear market. So as we go lower, what was that failure pattern again? That crown reversal, right? It's that 1, it's that 2. And again, make sure you understand how this works, right? It's 2 tries from those sellers, right? The first try here, though, fails to retest the low. The second try gives me a little trap off that low and right back up. A gorgeous setup. Love those crown reversals. And you really got to be patient for that. That reversal pattern will take longer than you think it will. I always tell my clients in the trade room, reversals typically happen longer than you assume they will. So stay patient. There's always time to buy it as it goes higher here. But if you want to call that bottom, stay patient off that reversal. Now, again, as the market goes lower here, right, if they get a 1, 2, 3, we can mark up that low, mark up the channel low, the channel high, and we can sell the top of that new channel, but we have to see some evidence of that first. Now, looking left on this, you'll notice we get that low at that 73.87.5, and then just like the S&P, right, we get that big number down at that 72.24 here. So again, you really got to be careful being a seller as we go lower. Just like the S&P, it's really not what happened today, it's what didn't happen. So as we go lower, if they do hold this, right, if they do hold 1, 2, 3, we will mark up those, right, that channel and to sell off the top of that channel. That will be fine, right? However, though, in this point, it's moved down. Crown reversal is the option to buy off of that low. Don't forget, if we do end up back inside that range, we'll sit on hands inside of that range. And of course, if we do make it back up into that range here and then try to go up, this will really be where a lot of sellers are waiting. We've got that sell zone overhead. We got that hidden channel overhead. What I'm hoping is the market tries to break out. The buyers, of course, try to buy the pullback. At that point now, it's not a bull market yet, right? It's a bear market. We may see the reversal with the 1, 2, 3 reversal, but at this point in the game, it's still a bear market. Let those buyers try to buy off that moving average pullback, and we, of course, look to sell right into their failure. And again, you can see an example of that, right? We go up, we pull back, the buyers try to buy off of it, right? And those sellers come in and sell right into those stop losses. So again, I want to see it up a little bit higher, obviously, because people will be waiting for that tomorrow. Up, 1, 2, sell, and back down. Or, right, maybe we go up into that range for a while, sit, wait, up 1, up 2, right? Get those buyers, again, trying to buy that pullback and sell into that failure. Or maybe it's a 1, 2, 3, right? A two-legged pullback to use that trend line now, right, as that key level of resistance as well. Or, right, it's that 1 strong move up, 2, 3, right, strong move off. Again, strong move starts the process. Strong move higher, pull back to the moving average, strong move off. What does that do? That turns this into a bull market. Now, again, I'm not in the business of predicting reversals, which is why I'm not going to even try to buy that first pullback, right? That first pullback will likely fail. And I'll be there looking to sell into those stop losses of those rookie buyers or counter trend buyers, because we know the odds just aren't in their favor, right? The odds are still very much stacked, right, on the bear side at that point. However, if they hold that pullback to the moving average after that strong push up and they jump off that moving average now, perfect. Now we know we're bullish. It's always kind of frustrating to miss the move going higher, but it's not a reliable buy. Once we get that reversal, yeah, now it becomes a much more reliable buy. We're looking for that pullback, right, as we go back up to retest the high, right, from earlier today. So Nasdaq and the S&P are very, very similar in that sense. Right, I'm looking for that possible crown reversal off that low. Most importantly, though, we sit on hands. We sell with those buyer failures up above the top of that range, or it's a 1, 2, 3 reversal. Mark up that high, mark up that low, buying off of that low now. And again, those reversals do usually take longer than what you think they will. So stay patient. And remember, really patience is learned, right? It really is. Most of us, I know I was like this. When I was a rookie trader, I had zero patience. I had negative patience, and a lot of that was because I just simply didn't know enough about how the markets moved yet. I didn't know what was likely coming next. One of the big benefits of doing this with me every morning in our trade room is I'll tell you, don't worry about this. Don't focus on that. Don't stress out about this. Wait for this, right? I'll keep you in line. I'll help you build those patience and discipline muscles as we do it together every morning in the trade room. Because again, when you're brand new at this stuff, it's very easy to overtrade because you just simply don't have a lot of experience yet. It kind of reminds me of the child in the back of, in the back seat of the car saying, "Are we there yet? Are we there yet? Are we there yet?" Right? The reason why kids say that is because they don't know where they are. If you told kid in the back seat, you'll know we're there when we get to so-and-so, that knowledge of where you're going, right, will allow you to be a lot more patient. So one of the big benefits of trading with somebody who has some experience is it can kind of calm your emotions down there so you're not forcing those trades before they're due. Next up here, over on the gold. Now, there's a lot happening here right now on gold. Let's break this down. First of all, we know we're bullish. Most important thing is we know we're bullish. Next most important thing is this trading range, right? That range. This range pretty much settled in about 8 o'clock Eastern time this morning, as you saw, right, in the trading this morning. We got that strong move down, that failure right back up again, and it came right back into that range again. So it's definitely a bull market. But that bull market, though, is into a trading range. And, of course, a range tells me I want to buy low and I want to sell high. So obviously, right, being a bull market, I'd like to be a buyer, right, below the low of that trading range. And again, the size of that range, right, allows me to identify now where my buy zones are and where my sell zones are. It's a very narrow range too, which is a big clue because it tells me I need to get a relatively deep pullback if I want to do this the right way tomorrow. Now, what else do we have here? We also have some higher highs up here, and I can connect those highs, bring it down to that low, right? Connect those highs, bring down to that low, and that bull channel. Now, that channel really isn't very helpful right now, to be honest with you. But if we do end up getting a rally higher here, I may be able to use that channel later on in the process once we can get some proof of this move going higher. That channel right now is not going to be it's not going to be that useful because, as you can see here, the low of that channel, it pretty much puts us right into that range, which just really isn't a great place to be trading overall, right? That's why I call it the no trade zone. So we know we've got that channel. That channel may come into play later on in the process. What I really like, though, is if I take those two highs, create that trend line, bring it down to that low, right? Look at this beautiful hidden channel here. I call these hidden channels, it's a channel, but then I go one step further and kind of mark up those lows down here. And I'll tell you, these types of levels of support will sneak right up on you, and you'll be amazed how well they work. That's called a hidden channel there. And then, of course, I've got kind of almost like on the S&P here, that expanding triangle, right? Trend lines get drawn up. But most importantly, in a bull market, I want to find levels of support to trade, right? So I want to find that support level. That's another great support level. And as you can see, we talked about stacking levels up to find confluence last night on the newsletter. I mean, we've got that trend line. I've got a reversal line here. I got that expanding triangle line. I've got my range line right there. I mean, the list just keeps going on, right? 4 different levels of support down here. So I'd like to see a pullback, and I'd like to be a buyer on this. If we go higher here, remember, we got that high from yesterday right overhead of that 1546, and there's not much more up there. Right? There isn't. There's not much more up there. So we know all eyes and ears are focused on that 1546.2. Only problem is this is major resistance as we go higher, right? Major resistance up there. I don't want to buy into that high. So as we go higher, I've got a plan for lack of buyers up there. So let's talk about these 2 scenarios. Really there are 3 scenarios here. One scenario is we get stuck in the mud around that range. If that's the case, sit on hands. What I do want to do, though, is get that pullback. If I can get that pullback, again, that should bring the moving average down. We should see sellers try to sell off that pullback. And once I get those sellers trying to sell the pullback, now I'm looking for that failure into that pullback combination off of that low. And again, I've talked a lot about this combination setup, this failure into pullback. The key here, obviously, is to do it off of these support levels, right? That's the key. We don't just trade patterns, guys. We trade the situation. We trade the context of the market. We know we have a range overhead, so we don't want to trade too high here. We want to buy. It's a bull market, so we find those levels of support, and we incorporate those patterns off those levels of support. And again, all I can do tonight is just identify the areas and talk about the patterns. But this is why I keep referring you over to that free trading class, because as part of that free trading class, you'll see hundreds of examples of how we actually apply these patterns to our favorite futures markets, that we can really see how they look, right, on a real chart. And then, of course, right, if we don't get that pullback and we keep going higher here, the hard part's going to be that level of resistance overhead. And so what you're thinking is a strong move up and a two-try breakout, but a trap low. As I mentioned earlier, there's one specific pattern that I look for whenever I'm concerned, not going against the trend, but going with the trend, but not having a lot of open space. That is definitely something that I'm always kind of watching out for, because I know I have a lot of resistance. Well, not a lot of resistance, just that major top up there at 1546. I'm assuming that you're not going to see a lot of buyers up here, right? There won't be a lot of buyers that will want to buy high like this. And so what will happen is they'll be waiting for that trap low. Okay, this is very, very common here when a market really spikes up, right? Really spikes up. Just those traps everyone comes waiting for, right? Like back here, strong move up, right? The bears try once, the bears try twice, and as soon as it traps low there, right, everyone's waiting to buy it, right? So we jump up, bears try once, bears try twice, get that trap low, and again, that trap will just alleviate the problem of buying too high as we go. Now, the last thing I want to talk about here, though, is a reversal, So we know we want the deep pullback, right? Get that failure into pullback set up, right? That failure into pullback combination off that low. But what if they hold that pullback, right? What if they hold that pullback? What if it comes lower, they hold that pullback? Remember, that's going to be our sign now. These bears are taking control. Mark the low, mark the major high, mark that low, right? And we're selling, and we are selling off of that high, right? So keep that in mind. If we do see this thing run 1, 2, 3, mark up that low, mark up that low, mark up the new high of that channel. There is your sweet spot, and we're trying to sell right off that high. Where's my target at that point? My target at that point is back down to retest those lows at that 1488.9. Doesn't look likely tomorrow, but hey, we've seen some very hot and cold markets this week so far. Everybody seems to be obsessing over the chat back, chit chat back and forth, the posturing, right? The saber rattling back and forth here, right? You know what measuring contest between the U.S. and China right now. It definitely causes some seesawing back and forth. So we'll be ready for it here tomorrow. And again, we'll be trading tomorrow morning in our trade room. How about some euro? The euro is possibly the big head faker, right, for tomorrow. You'll notice on the euro, we do have a bear market overall. That is quite clear here. But you'll notice, though, we went from the range from yesterday down into a range, right, for this morning. And so anytime I see a day start off with, right, a balanced market like that, I always know the odds are pretty good. We're going to end up right back where we came from. The problem with the euro right now, though, is you've got that big, strong move down. So if I'm trying to be a buyer on this in a bear overall market, what was the best pattern? We talked about that earlier. It's that nested, right? That crown reversal. That's the pattern I'm looking for here right now on that euro. Okay, that's the pattern. Hopefully we can get it with that 1 and 2. Right, that 1 and 2, that would be ideal. And you might notice here, I've got this battle zone right here, right? That battle zone, if you go back out a little bit here on the chart right now, keep going, there you go. If I line up those lows up off these highs, you'll notice how well, now, I'm not sure this channel will be too effective here, but it's definitely a area of support, right? It is definitely a support line, whether it be an expanding triangle trend line or whether you want to call it a channel. So I do like that channel. And the big reason why I like it is because put the midline on. Anytime you see a big wide channel like this, you always want to put a midline on. And I'll bet you're going to see some bears trying to sell off that midline, right? I wouldn't be surprised at all if we see bears trying to sell off of that midline. And when we do, that's where I'm going to be looking for those bears to fail and snap back higher here. So now we zoom back in. We look closer now at this chart right now. There's that midline. There's the last prior swing. And so now, ideally, I want to see, right, I want to see a 1. I want to see a 2. I'd really like to see him again, right? Try to sell off that midline. That would be ideal because then we know all the sellers are in. You know what I mean? As opposed to a 1, a 2 down here, right? As opposed to something, oh, sorry about that. As opposed to, for example, come back to me here. As opposed to if it was really low, right? If it's really low, really small, these little micro patterns are always a little bit tough, right? I really do want to see go up 1, 2, trap and go from there. That would be the ideal. That way we know we have all the bears. They're all committed on that trade now. And we can, of course, let those aggressive sellers try once, let the conservative sellers try twice. Then we know where stops are, and we're buying right into those stop losses. Target, of course, is back up into that trading range. And then, as always, the amount of the move below the range is the amount of move above the range. And surprise, where does that put us? It puts us right back up to yesterday's high, which is, not yesterday's high. Yes, yesterday's high. Tomorrow will be the previous day high, right? But that is a very, very interesting coincidence. Now, as we go higher here, if we don't get that set up, let's say, for example, it just runs. This euro is relatively low volume, right? Everyone's on vacation in Europe right now, so like you should be, by the way, I might say. And of course, strong move up. We know that trading range, right? We know that trading range as we go higher. Watch for that 1, that 2, that trap and go. Now again, why would I choose to use a trap on this one? Because I don't want to trade too close to where? The no trade zone. So as we go higher here, again, if you see this thing just torch going higher here, the bears try once, the bears try twice, now you know stops are in play. Now you know sellers are committed. Now you know a relatively strong signal candle and stops are going to get hit. Buyers will take over this market and run this thing right back up. So those are kind of two patterns I'm watching for right now here. It's that crown reversal off the low, or it's that strong move up, 1 try, 2 try, trap low here now, because again, you want to avoid buying into that trading range. Now, what if we keep going lower? What if we keep going lower? Well, if we keep going lower, we have to assume that next big round number at 11,000 is going to be our next big objective. But imagine now, strong move down, pull back, and run going lower. It's pretty easy. Mark up that low, mark up that low, mark up that high now, and we're selling right off that high of that new channel. So it's a relatively simple idea. The problem is, though, you don't want to sell as that market's going lower, because this could easily sell, go down, and then 1, 2, crown reversal, and back up from there too. So it could easily, we could easily still see that same reversal pattern, but after those sellers come in, right, and give it a good whack inside that battle zone, right? That big strong move down, you're going to see some sellers inside that battle zone most likely. If they keep going lower, right, if they keep going lower here, keep grinding lower, again, they still have to hold that pullback and go. Then we can mark up that low there, and we can sell off top of that, right, of that channel. So we still have to wait for that pullback. If they get that pullback in the short term and run it, right, run it hard, now we can mark up that low and we can trust that new channel. But if they just simply pull back and just kind of double bottom on this now, that's not going to be enough strength down there. Now it's on, going back higher here. 1, 2, again, crown reversal pattern, as we mentioned a couple times tonight on this video. So now we've got a good grip on what to look for here tomorrow on that euro. I think euro will surprise some folks tomorrow morning. Gold, I'm very interested to see what's going to happen on gold here. It's very tricky as we go higher here on gold, so watch those traps. S&P and the Nasdaq are dying right now for a deep pullback, maybe a big short covering rally tomorrow. And on that oil, right, looking for that carry back up right into that high of that trading range. And again, maybe a full-blown reversal for tomorrow as well. And again, guys, speaking of tomorrow morning, what are you waiting for? Come on, join me tomorrow morning, 8 o'clock Eastern time. Let's trade this strategy together. Tonight, my job was to get us all ready, mindsets ready, news is ready for tomorrow, charts ready for tomorrow. But again, like I always remind you guys, the strategy is very, very simple. What's not so simple is staying patient, being disciplined, following rules. Sometimes the markets throw us curveballs, and we're going to be light on our feet. You're going to love my trade room. We trade the strategy together every morning at 8 o'clock Eastern time, and it's really easy to get started. Just get registered right below me here tonight on the video. If you're on the YouTube channel right now, I'll put all the links in the description of the YouTube video. Follow those links. Head over here to schooloftrade.com. Get registered as a brand new advanced member. The advanced membership includes all of our resources here at School of Trade. There'll be a video in there to show you everything that's included. So watch that video. Learn more about membership. Get registered. That way you're ready for tomorrow morning at 8 o'clock Eastern time. And if you're not ready yet to be a client, that's fine by me too. We have a great free trial here at School of Trade. As part of our free trial, get the free trading course, right? Learn my 3-step strategy, my 4 favorite entry setups, right? You'll see hundreds of examples on that free trial for our how we apply this strategy to our favorite markets, and of course an invite to come join our trade room as part of that free pass. So join that free trial on the homepage of the website. I'll put all the links in the description of the YouTube video. Don't forget, when you register for the free course, I'm going to send you an email, right, to get that party started. So check your email, and sometimes those emails get stuck in your spam filter. So look in that spam filter if you don't see the welcome email as part of that free trial. But in the meantime, guys, get some rest here. Hope you guys have a great week. We've had a fantastic week in our trade room so far. Hope to see you there tomorrow morning. And as always, my name is Joseph. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.